All right. Well, thank you again for joining us today for discussing financial scenario planning and liability considerations in the age of COVID-19. I think I know most of you on this webinar, but I'm Rabbi Daniel Septimus, Chief Executive Officer of Shalom Austin. And just a quick reminder that this webinar is being recorded. I am joined by 4 incredible participants in today's discussion. We'll have 2 presentations followed by Q&A that will be moderated by Rick Rosenberg. Our first participant is going to be Stacy Flores. She'll be talking about liability considerations. And Stacy is the managing director with Marsh Wortham and comes to us with over 30 years experience in property and casualty industry with the focus in working with nonprofit organizations the entire time. Stacy is degreed from Broward College and continues to maintain additional accreditations in the areas of P&C insurance consulting and risk management consulting. And Stacy serves the community through board positions at her local high school for the Central Texas chapter of Risk and Insurance Manager Society and an advisory board member for BBVA. Nicole Gilger, who's our current Chief Financial Officer of Shalom Austin, received her undergraduate degree in finance from Texas A&M University. She's worked for several years with the desire to find something that challenged her more. She returned to school and received her master's in accountancy from Texas State, University. She started her career in audit at PricewaterhouseCoopers, first in Houston and then here in Austin. And after 8 years, she transitioned to a smaller accounting firm, DK Partners, where she specialized in compliance, SOX, and internal audits. While at DK Partners, Nicole was given the opportunity to step into an interim CFO role, then lead a company through a year-end close, the annual audit, board reporting, and training the new CFO 6 months later. The experience solidified her decision to move out of public accounting and into a position leading her own accounting department. She accepted a position at Trellis Company, a large nonprofit guarantor of student loans, first as assistant controller and later as a VP controller. Nicole learned of the CFO position at Shalom Austin and was moved by the opportunity to not only lead the financial operations of the organization, but to be a part of an organization that's giving back to so many others. She's looking forward to helping the organization develop new processes, strengthen controls, and being part of the positive impact that Shalom Austin is having on the community. Next, Scott Grossfeld is currently an owner and COO and CFO of TacoDeli. I think we all know it, but it's an Austin-based counter service restaurant where he has been for the past 10 years. And prior to TacoDeli, Scott owned a CPA firm where he assisted small and medium businesses with financial and technical issues. Prior to founding Scott Grossfeld CPA LLC, Scott held the position of CEO of the Association of Certified Fraud Examiners, a global privately held for-profit association based in Austin, Texas. And during his 5-year tenure as CEO, Scott doubled revenue for the association and grew the membership from 33,000 to 55,000 members, initially at the company where he served as CFO, providing management and oversight of all finances, as well as working with senior leadership to develop organizational strategy for alliances and operations worldwide. Scott has previously worked for PwC, leading process improvement teams at Fortune 500 companies such as Goodyear and Lucid Technologies. He successfully facilitated both business processes and reengineering projects and enterprise software implementations. And he's also held sales, marketing, and product development roles at 2 Austin software startup companies. We'll say that he has an extensive background. He earned his master's in professional accounting and a bachelor of business administration at the University of Texas at Austin. And Scott has been actively involved in the nonprofit community, having served volunteer roles with Temple Beth Shalom and Hebrew Free Loan Association of Austin. And Rick Rosenberg is our managing principal for DPFG Incorporated. Based in the firm's Austin office, Rick focuses on and oversees all consulting activities in Texas for the firm. In this capacity, Rick provides strategic planning, investment analysis, workout and financing services at both the project and entity level, with a particular focus on the use of public-private partnerships to efficiently and effectively finance the infrastructure and vertical improvements associated with residential, commercial, and mixed-use developments. With a broad combination of analytical strategic and communication skills, Rick has over 39 years of extensive real estate and finance experience, encompassing the investment analysis, acquisition, deal structuring, equity sourcing, asset management, and financing of commercial and residential real estate investments, and operating companies at both entity and project level located throughout the United States. Rick received his undergraduate degree in accounting at the University of Pennsylvania Wharton School, and his MM is in finance and management policy at Northwestern University. Rick currently serves as the chair-elect and treasurer of Shalom Austin. Rick and his better half, Elise, have 2 children and 4 grandsons and are active members of Temple Beth Shalom. So I'm going to turn it over now to Stacy to kick us off. Thanks, Stacy. Unmute your there you go.
Can you hear me? Very good. Okay, so I just wanted to, we're going to touch base on the financial and liability considerations in the age of COVID. Again, my name is Stacy Flores. I'm going to start off just by addressing these are 7 risk areas that the risk managers who we polled in May of 2020, what areas they thought were resonating most for your own organization, for your own business. So you can see 4 of these areas are related to economic risks, highlighting recession and bankruptcies being of the number 2 concerns. And then 3 other areas were addressed, and that's technology risk, another global outbreak, which was related to societal risk, and then geopolitical risk regarding moving people and goods across the border. So a lot of that's about trade. You can see this was just done, and we'll continue to do these throughout the course of COVID. I'm going to take this from this big picture overview. These are what's addressing companies. I'm going to start off with addressing some things you do, and then I'm going to kind of grow you through this experience. So the first thing you can do just about making any changes, COVID-related changes to your program, is just make sure you talk to your agent or broker. There have been some opportunities where some insurance companies have allowed people to push out their payments schedule, and that's all ending on June 1st. So those payments are going to start to come due in June. And then beyond that, like if you've had exposure changes, if you've had sales or revenue decreases, or you have vehicle use, or your inventory's down, feel free to like talk to your agent or broker and make those changes. That can help save you some premium dollars and ease up some cash flows for you. And related to any new operations, we've had some clients that have started making masks or making equipment. Make sure you're communicating that information to your agent or broker and to your insurance company. We are entering what we refer to in the insurance industry as a hardening market, and it's being compounded by the complexities of COVID, which are going to cause some more liability concerns. So I want to encourage you all, if you're entering your insurance probably anytime over the next few months, or at least through the end of this year, start early, engage your broker in some conversations, take a look and understand what your specific position is related to losses, because there's going to be a lot of talk about what's happening industry-wide and the industry is playing out financially. But if you need to be able to juxtapose that to what your actual loss history is looking like. Have a strategy session with your agent or broker. Regardless of your size, if you're a smaller business, maybe a quick 5 or 10 minute phone call just to understand what to expect. If you're a larger business, I've had some clients where we've had 1 to 2 hour calls regarding the strategies for the renewal. Prepare for the hardening market. You are not going to have a flat renewal this year. I'm going to hit on some of that on the next few pages. Prepare for some new underwriting questions, and these are directly related to COVID. Coverage, they are going to ask you for financial statements. They might ask you before just for your annual financial statements, but I would expect an interim financial statement if they're older than just a few months old. They want to understand how COVID has impacted your business and how you're making decisions related to it. On the employment practices section, you're going to see some questions related to any RIFs or layoffs that may have been conducted. I'm going to touch on that a little bit later. And then the carriers are also going to want to understand how is your organization responded to your network systems, the fact that you've changed to working in a contained system and all of the changes that have happened and how you're working from home. What new controls are put in place. You will see, as was mentioned on the prior slide, cyber is at an all-time high presently. And there's one expectations. There's going to be some new terms and conditions. You might see some communicable disease hitting policies. You just need to be prepared for that. I'm going to just briefly touch on these. There's three main areas of business. We've got property, area of casualty, and then we've got the financial products line, which tends to be your directors and officers and employment practices coverage. What we're seeing in the property market, and this is due to losses just having a pretty significant impact on the insurance companies and the payments that have been paid out. The reinsurance marketplace is putting a lot of pressure on carriers to get rate, and we are seeing this collectively. This is a year-over-year review, 2015 to 2019, first quarter 2019. You can see here the picture's not really looking pretty. 30% of businesses or clients are seeing at least a 20% increase in their premium or their rates related to their property exposure. So if you're a tenant in a building, you might not feel it as grossly as if you own a portfolio of properties. You're going to feel it a lot harder. Some things you can do to mitigate that would be to consider increasing your deductibles or making some changes to your terms and conditions that you have. Underneath your casualty program, workers' compensation, general liability, and automobile liability, these have all seen some increases, but the increases on these lines thus far have not been this year have not been that dramatic. I'd say they're probably in the 5 to 10% increase, which seems like a lot. But when you compare that to the umbrella and excess marketplace, those increases right now are in the 50 to 500% rate increase areas. All of this for the casualty lines is really being driven by large settlements and social inflation. Insurance companies are getting a lot of pressure from the reinsurance and most especially from the umbrella marketplace to increase premium, and they want to limit their capacity. As they limit their capacity, that's requiring you to use multiple carriers who all want their own premium respective to your risk. They use multiple carriers, which is what's increasing your cost. Again, I think there's two things to use here is benchmarking. Ask your agent or broker to benchmark what limits of insurance you're carrying in comparison to your peers. I think this will help you get a good understanding. Years past, many people or businesses were procuring higher limits of coverage. They were doing this because insurance was so cheap. Now might be the time to reel some of that back in and look at that. So a good peer-to-peer comparison is going to be helpful there. Underneath the directors and officers, which we talked about directors and officers and employment practices, we are going to see some more COVID-driven legal issues, lawsuits that are going to arise as a result of it in an already hardening marketplace. You can see here, first quarter of 2020, 78% of our clients have seen some sort of an increase, with only 16% of them staying relatively flat. But you can see that's been kind of growing over the past few years with, it hasn't been since early 2018 that we saw what was some stability there in the marketplace. So that is changing quickly. And I think it's going to get worse with bankruptcy action and employment practices cases coming up. So some of the lawsuits, I just kind of wanted to touch base on some of the lawsuits that we've been seeing or reading about, and that you can expect to also see are employment practices cases. That's mostly regarding discrimination. with regards to the risks, that sort of thing. And that's why the underwriters are going to ask some very tight questions, wanting to understand what your processes and procedures were and your selection criteria. And you're going to see class action lawsuits. We've seen some of that already with regards to schools, colleges, private schools, saying that they didn't get the experience that they paid for, and they didn't feel like that the colleges have reimbursed enough funds. Just yesterday, I saw that some Amazon employees have filed a suit for unsafe work conditions. We've seen some insurance company lawsuits. Most of that started with the restaurant industry, who were very quickly impacted by COVID with the automatic shutdown. So restaurant hospitality saw that very quickly. And some of those lawsuits started very early on. And some of the ones that are resonating now are healthcare companies like assisted living facilities and nursing homes, where the virus may have gone through there and there's been some illnesses and deaths as a result. Another area just to pay some particular attention to is, and this is, it can be a liability, but it's also got some first party risk for you, is cybersecurity. So we have all these new things happening with the teleworking solutions and cloud services, new collaboration tools, Zoom meetings, or any other collaboration tools that are happening. People who are now using or bringing their own device and those are being used in the work environment. Cyber attacks are on the rise, and it is having a dramatic impact to your cyber technology policies, and sometimes just those little extensions that are underneath your package policy. From a risk management perspective, I'd be remiss to not mention this. Make sure you have some sort of a policy or procedure in the handling of funds. Phishing is at an all-time high, so people are getting attacked. People are hacking into the email systems and they're asking people to wire transfer funds. So make sure you have some sort of a protocol that usually involves picking up the phone and calling the appropriate person to make sure that they actually did make that request of you. And then also, if you can, talk to your financial institution. Today, the financial institutions, they have positive pay or dual authorization for wire transfers, and this would just help prevent a loss of some much needed funds that are helpful to your organization. So all of this with regards to the liability issues in particular, there's so much unknown, and I think just in general, we are a litigious society. I think risk management is what's going to be key here. I'd like to encourage you, big or small, regardless of the size of your entity or even just your home, build a risk management team and then start to practice risk management processes. So I'm asking you just kind of touch base here a little bit on building the team, identify the risk, pay particular attention to supervising and evaluating, make sure you're able to pivot, and then look at your risk enterprise-wide. This is just a page of some resources that you should be tapping into. Again, make sure you talk to your agents or brokers. And then I just want to offer up to you guys, this is a free resource to you. You just log into this site here, and this is the Marsh Risk Hub, COVID-19 Risk Hub. And there's a ton of resources available to you. A lot of the information that I've provided is in here and available to you, free to use. You just need to put in your email address. 4 quick things that are up and coming. We've got pandemic backstop insurance. It's going to be similar to the Terrorism Risk Insurance Act, which is before Congress at the present time. Where you have legislation pending regarding immunities for businesses, understanding compensability under the workers' compensation law, that's changing on a daily basis, and new insurance products related to pandemics, which are not really quite here yet, but they are coming now. So I think that's it.
Thank you, Stacy. Really appreciate that. And now I'm going to turn it over to Nicole Gilger.
Great, thank you. So for today, really, I wanted to talk just a little bit about what we at Shalom Austin have been living over the last 90 days, which is probably very similar to what you have as well. But then I also wanted to talk about financial planning, scenario planning, and giving some tips as to some thoughts on when you are developing out your scenarios. You know, when we originally closed down back in March, for us, roughly 75% of our revenue comes from services that we provide, whether it's through our childcare, through after-school programs, summer camp, you know, the membership from the JCC. And as soon as we knew we were closing, we knew that, you know, with 75% of our revenue gone, we really needed to focus and turn our attention and looking at cash. As a nonprofit, we don't have a ton of cash on hand. We don't have heavy reserves. And so that was our focus, was on the short term and making sure that we had enough cash to pay our payroll and our operating expenses. We focused there right away. We also turned our attention to thinking through different ways of us bringing in cash, whether it was through pledges that had already been made, or looking to convert tuition and membership over to donations as well. So looking through basically different ways that we could bring in cash to make sure we had enough funds to operate. We also started, as many of you have, we applied for the PPP loan, and fortunately received that within the first round. And that was able to take off a lot of the pressure of having immediate cash needs, thankfully, and allow us to really turn our attention to looking at the rest of the year and what the financial impact may look like for us being closed. What we ended up doing was looking at various scenarios rather than just having one scenario. We ran 4 different scenarios and basically based on when we would reopen, whether it was in estimating one and reopening in June, July, August, and then also as if we were to reopen in September, and looking at the financial impact of that to give us an idea of kind of what was ahead for us. And to give us an idea of how deep were our losses going to be. Within that, you know, in those scenarios, you know, we looked at and took into consideration, you know, what costs that we knew we were going to immediately probably cut for the rest of the year. You know, the ramp up, we had the expectation that as soon as we open our doors, it certainly doesn't mean that we are going to be at 100% operations again. So, you know, we built that into our model. We also built in knowing that, you know, the longer that we're closed we're also going to impact probably how quickly operations would ramp back up. I would think that, you know, if we're closed for a shorter period of time, operations would probably ramp up a lot faster than if we and the economy are closed for a lot longer period of time and people are holding their money back and not willing as freely to want to be a member, coming back to the J, as well as donating. So trying to take all of those items into consideration to give us an idea of, like I said, of what the rest of the year was going to look like and what we were up against. So we could also start planning for you know, what next steps do we need to make. The other thing that we've been working on as well, and I'm sure you have that have received the PPP loan, is keeping up with all of the changing facets of it. The new guidance comes out, you know, the different pieces of it, and making sure that we understand what that means and how that's going to impact us. The other thing, like I said, when it comes to different financial scenario planning, that I also wanted to mention was different ways of things to think about when you're doing your planning. Include take a high level approach. You know, don't get so mired in the details that it makes it difficult to pivot and change it if something needs to be changed in your scenarios. Another thing to think about also is don't involve a ton of people in the process. Again, because that also could just slow the process down. So for example, like when you're doing your annual budget, you know, you're really starting, it's kind of the bottoms up, where you're starting with lots of people involved. You have you're way down at the bottom in the details of the numbers, and you're working that up collectively to develop your budget. And when you're doing something more like a crisis scenario planning, you really want to start and stay at the top and have fewer people involved. And that way it's more high level. And again, as I've mentioned earlier, it allows you to make changes to it a lot faster as changes occur. You do want to run different scenarios, and you really want to make sure that you're committing the same amount of time to each one of those scenarios. And the reason is because if you are really focusing in on one, you're going to provide a lot of that, and you're not going to provide as much attention, and that takes away the amount of accuracy that you're going to have in those. So it's really good to run multiple scenarios and really, like I said, give equal attention to each of those. I was reading something not long ago on scenario planning, and it also talked about, 3 is a typical one, but 4 is actually a better option to run. And the reason is because otherwise people tend to look towards the middle of the road, and that's where their focus is, and that's where they'd ultimately spend the most time. And that would be the scenario they would think would be the most likely. Whereas 4 will actually require you to kind of think a little bit more and really make a decision to look at what scenario you think might be the right one. With each of those scenarios also, make sure you have a good narrative behind the numbers. Numbers are able to tell you can look at a number and see what the bottom line is, but it's really the narrative that's going to provide the information and really tell the story of what those numbers mean. So, talk about the different assumptions that you used. You want to talk about the drivers that were in there as well. And not only that, it helps to, with so much other things going on, having that narrative really helps remember like exactly what you did in each one of those. And again, because they should be different, because it's a different scenario. Driver-based, really think about what's important to your organization. What are the key drivers there? Is it sales? Is it how many children can be within a classroom? And you want to develop your assumptions using those numbers. Whether, again, how many students in the classroom, how many members. And knowing now that we have COVID and as CDC guidelines are coming out, those numbers may be changing because we may not be able to have as many people as we originally thought. Lastly, I would say, be willing to change within your scenarios. Be open, listen to ideas from others as well. Don't feel like this has to be all yours. You're going to put the numbers together, but involving some of your other execs in that thought process is going to provide the needed information to help you as an organization really make the right decisions and knowing what's ahead for you. I think that's about it.
Great. Thank you, Nicole. Thank you, Stacy, very much for those great presentations. I'd like to open it up to questions. If you put it in the Q&A section on your screen, that would be great. And Scott is obviously also available to answer questions. We were excited to have Scott participate. He understands the nonprofit world, but he comes from a private sector perspective, and some of those issues that we're all dealing with in the nonprofit side, he's dealing with a different view, perhaps, on the private side. And I thought it'd be good. We thought it'd be good to have his involvement as well. So I'll look for questions. But in the meantime, if I may ask, has anyone, when they were doing their planning or seeing their clients dealing with it, were there any real surprises that good or bad that you really didn't expect as you went through this process?
Yeah, I can probably answer that from my perspective. So, I think as we were going through, at least, TacoDeli, as Stacy hit, the restaurant industry was hit pretty hard, pretty quick. And I think that's one thing to think about, for everyone out there is the COVID, just like it impacts different people from a health perspective, it impacts different organizations differently as well, really depending on, as Nicole was highlighting, where your revenue streams are and what the cash, impact is. So, I think for us, you need to be nimble, as Nicole was saying. As we kind of went through our scenarios and kind of developed our own cash flow models, it was very surprising that every time we thought we were estimating, it was wrong, right? The numbers kept going down and down and down and down, and we kept having to kind of rethink and react. And so that was one area that was definitely for us at least challenging. The other one that we've come across recently, as fortunately we hit the bottom and have been climbing up since and continue to see good sales growth, is the need to rehire, and how a little bit challenging that is right now in this environment, just because of one, particularly in our industry, with the additional money that's out there for people on unemployment, at least at the end of July. Sometimes it's a hard ask for people to come back to work just because of their own monetary situation, or having to care for kids, or even their own health concerns. So that's one area that I know for us has been a surprise in terms of the need to bring people back, and how hard and challenging that has been, at least currently.
Great. Anybody else want to chime in? If not, we've got a question from Andrew Smolkin. How will damage claims from social disruption and looting affect premiums? Stacy, I think this is probably in your bailiwick.
Yeah. I think it's going to have a pretty dramatic impact on an already complex market. Like we hit on 30% are seeing 20% or increase and more in their insurance rate. So for instance, if they were paying $1, they're now going to be paying $1.20. COVID has had some impact on that, but not as dramatically. But what is going to happen, there's going to be two parts to this. One, it is now categorized as a separate catastrophe claim in a marketplace that was already reeling from catastrophe claims. So it now has its own category with most insurance companies, as we're reporting those incidents of looting and theft and damage to those properties. That's going to resonate there. But adding another form of complexity to it is the business interruption. So if a business is shut down as a result of the looting, and the fact that maybe they were only already at 25 or 50% of their sales, that's going to add a new complexity to the business interruption. I'd like to encourage people, when possible, to consider hiring a forensic accountant to assist with that calculation, so that you could try to maximize as much of that as possible, but that's not going to be easy. Some insurance policies might include an expense reimbursement related to the calculation of that, or the hiring of a forensic accounting firm to hire that. Some do, some don't. So it is something that you need to just make sure you read your policy. But there's two aspects of it. It's going to make it complex.
Great. Thank you very much, Stacy. Were there any particular resources that each of you found that were they relied upon the most as you put together, or your clients put together plans in response to the COVID-19? Third-party sources, third-party information?
I can chime in on that, especially in regards to the PPP loan. JewishTogether.org, which is JFNA, has been a tremendous resource in providing Q&A, providing webinars that to help understand the loan, to help prepare for the loan, to help prepare for forgiveness. It's been a wealth of knowledge. I felt like it really had us ready to go. Another one also is AICPA.org. That's the Association of CPAs. And it's same. It's had they've also had a lot of webcasts that have helped to understand and to, again, be ready for the loan and what potential changes, helping to interpret the information, especially like in the early days of utilities, of understanding what exactly that was and what would qualify as a utility, and knowing now, and I think it's been clarified since, but internet charges and things along those lines, transportation are now included in utilities. So both of those have been tremendously helpful in being able to understand, what could be included as a forgivable expense.
Yeah, now, go ahead, Stacy.
Just a couple things to add is I think definitely talking to the trade associations, which I think that's part of what Nicole's speaking to, trade associations, but also risk management professionals or cyber technology firms. I think those can offer some assistance and guidance. And then there's risk management on the whole organizations, COSO, which is used accounting firms and accounting areas. Those offer a lot of information. Of course, there's the traditional, the WHO and the CDC. Of course, there's our hub.
Okay. Thank you, Scott.
Yeah, I would just add, those are great ones and definitely stuff that I've relied on, and I would definitely encourage everyone to look for as many resources as you can, because a lot of the information is changing quickly and daily. And so at least for us, I know our the CPA firms that we work with have been very helpful, particularly as it relates to the PPP money and helping us stay up to date in terms of those changes. There's a additional, a lot of the PPP also impacts some HR functions. So if you do work with any sort of attorneys that are in the employment law sector, they can also be a good resource. And SHRM, which is the Society of Human Resource, is an association that deals with HR, and they have a lot of good resources on their sites as well that help kind of navigate some of the employment-related issues that are come through this and will continue to come through this.
Thank you, Nicole, for putting on the chat the websites that the links to the organizations you met. I will tell you that Jewish Together, the Jewish Federation that Nicole referenced, has been incredibly helpful. And on top of things, and quite frankly, in some cases ahead of some other trade associations that you would think would be on the front lines of it. They were in the battle with Congress getting nonprofits to be part of the PPP program and really help make that happen. So they've been just a great resource. It makes us, it makes it worth our dues to be part of the Federation. I get one of the things that I've thought about, and we're all dealing with the day-to-day crisis mode, but have you or others been thinking about when we get back to a more normalized world, whatever that is, we don't really know, but what will you change in your processes and procedures? Will you take advantage of this crisis to do things, maybe improve your best practices? And how might you do that? Ooh, I can't stump you.
I'll chime in. A little bit of this is, so this is kind of the insurance industry, but just kind of speaking to how the industry is adapting, pivoting and making adaptations to meet the needs of our clients. We are part of that pandemic risk insurance plan that's put before Congress. Like, we've helped to develop that, and we've helped to develop some pandemic risk insurance so that perhaps there could be something in the future that's going to respond to these things. Additionally, I just learned this morning that we've developed an insurance product. This speaks mostly to the restaurant industry, but an insurance product that marries up the food delivery and the insurance need, because in a lot of food delivery, like pizza places, that sort of thing, a lot of the insurance marketplace doesn't want to have a bunch of teenage drivers driving around in 30 minutes or less to deliver pizza. So what's happened is now there's this new, like, shareable, it's an app. When you start driving to make a delivery, you're paying for the coverage only for the time that you're actually on the road making the delivery. So it's kind of an interesting innovation. And I think it's part of what I think is going to be the beauty of what we see is some of the innovation that comes about as a result of just pivoting and making some changes and trying to offer relief to clients.
Yeah, I would just add, it might be unique to us, but as a restaurant, we quickly had to identify, and one tool that we really utilized was a kind of a 13-week cash flow model. So just something that we, as we started seeing our revenues decline, the ability to really kind of track week to week, as Nicole said, cash becomes king in this environment. And so, at least for us, we've always had, catering as a big part of our business, and clearly that's changed. And so, we've pivoted to dinner, which we've never been open before. And so I bring that up only in the context of, you have to be willing as an organization to maybe be able to not worry about sacred kind of cows in this environment, and put everything on the table as a possibility. It's the old mantra of never say never. And so, you really kind of need to think through what are the potential impacts to you as an organization in terms of your revenues, what's going to be impacted both short, medium, and long term, and then make sure that you're working to identify ways to supplement that, wherever you can. Obviously, you can't in every scenario, but you got to be, creative, where you can.
Nicole,
Absolutely. And I think as both Scott and Stacy said, it really comes down to being flexible and being willing to make changes. Even as we're doing preliminary right now on summer camp, we can definitely see that there's going to be a significant impact. And when we think about the future, this is our first look at it. We're going to have to look at how this is going to impact us for next year, because, as it is right now, this may not be a profitable program, whereas previously it was. So we need to already be thinking ahead to next year, and what kind of changes, how can we change the program to make it back to being a profitable program again, in light of the changes that are occurring. So essentially, being nimble and being willing to change how you do things, and to, potentially as well looking at programs that may have been profitable before, and you may not be able to have them going forward, and being willing to make those changes if needed.
Thank you. The example I would mention, we had some insight at the board at Shalom Austin from some key representatives of other Jewish organizations around the country. And one mentioned that, in their community, they had two congregations of the same type that were sort of both hanging on. And that this environment may be the impetus to convince them that for survival, they needed to become one. And things that, that's the kind of stuff I think we're all going to be thinking about, is not just surviving, but maybe moving on and becoming more successful. Also, if you were starting today, what would you do different?
I would say, for me, I would say communicate earlier and faster. Just try to get that information out as quick as possible, about making the policy changes just to help clients. It's been really hard to watch the struggles of our clients and what they're going through. And we will trail behind on that. The insurance industry is going to trail behind probably 12 to 8 months before we feel the effects that our clients have felt. But it's just really difficult, like when you're developing relationships with people and business owners, and when you watch them go through it, I wish we had solutions for them faster.
Thank you.
Yeah, I would also, there's some lessons learned from us as a company in terms of just communicating to our employees in particular. I think we were very focused on, external communications, and, a few instances where we probably communicated some stuff externally before internally, and so, we've learned from those at this point. But I definitely think it's important, particularly for your employees, to make sure you're communicating frequently, and using as many channels as possible. As I mentioned before, just the ability to pivot as an organization if you are going to be making changes to your operating model or what your expectations are. I think it's important to not only communicate what you're doing, but why you're doing it and why you need to do it, and just make sure that you continue to get the buy-in from your team members. And obviously, same sort of thing, externally, but, in particular for us, I think that's something we had to pivot on pretty quick, in terms of just improving some of our internal communications.
how are you dealing with, as we begin the reopening process, how are you addressing any potential fears that employees have about coming back from a health perspective? Economics, childcare, those are obviously critical issues, but I'm curious as to how organizations are thinking that through.
We started inviting some of our members back to campus and to come in, one at a time and whatnot, just to get them familiar with campus again. Because some folks have been gone for 60 days, 2 months. That's a long time, and there's a lot of uncomfortableness to it. Fortunately, we had an all-staff meeting not too long ago where a manager was on and said during the meeting, hey, I've been fearful. I've only left my house 3 times and since this all started. And she came in and said, I've come to campus. She said, I feel so much better getting here and seeing it and just returning to, because once you get back, it's not as scary. We made sure, and she shared that with everybody, which was nice to hear. So that's been one of the big ones. But also making sure that they're aware of all of what we're taking into consideration. All of the cleaning that we're doing, all of the disinfecting, all of the procedures that we're doing, making sure that they know that we're doing everything and we're following all of the guidance to make sure that they're safe. It's not just about the members that are going to walk in the door, it's about them too. And making sure that they know that and are comfortable with that.
Yeah, I would add for us to, we've been going through a phased approach as well with the employees. And also with our customers under the same, getting over that fear factor a little bit as Nicole was highlighting. So I do think, to the extent as people come back, not everyone's going to want to come in at the same time. Finding out what the right procedures are, if you can, allow people to work from home as much as possible. And again, same sort of deal in terms of just educating people in terms of what you are doing to try to prevent and minimize risk wherever is possible. And I think that's the important thing is, making sure people know that you have a plan and communicating that out. I think, and then like Nicole said, we've seen something similar where as people come back that first time, it is a little bit, a breath of fresh air. No one wants to, obviously we're not going to go back to a full office or either a full dining room, right away. But being able to kind of phase in and build some confidence has been a good strategy.
I know in our firm, we're making plans for our various offices to go back and reopen. And our corporate office set out a series of rules, which were very helpful. But as we looked at them here in our Texas office, we found it could be very challenging to operate within those rules because of lack of access to supplies, the cleaning supplies and the like. And so we'll probably be very late going back ourselves, and we're being just as productive from being at home. And that's not our firm's philosophy, never has been. But my bosses understand that if we can't comply with the rules that you want us to, we're better off staying where we are and continuing to be successful. So it's a challenge.
If I can chime in also, Rick, I think there's kind of 2 aspects to this that I think all of you guys have hit on already some, but the first aspect of it is just kind of the logistics of it and, kind of walking through that from the cleaning supplies to the schedules and maintaining some social distancing within the office workplace. I will send to Nicole and to Daniel, we have a 45-page kind of guideline outline that can help any organizations to do that. It's free. It's just kind of a helpful tool. Happy to send that out. But I think the other thing that I commend our company for doing such an amazing job of doing this is that they really are trying to allow the individuals to make their own decisions and to empathize with where they're at, whether it's the kid situation or maybe they have an immune compromised person in their home or somebody that they're a caretaker of. I think they've just done a stellar job of that. And I think as these things are opening up and allowing for more people to get together, I think keeping in mind that everybody is kind of still having to make their own decision is going to be key.
Rick, I would add one more thing to that. this might be under lessons learned. Don't assume that your employees or your constituents are working off the same information you are. There's a lot of information out there, both, some factual, some not. And so I think it's important that you identify those resources that you as either an organization or leadership team are relying on to make your decisions, and that those are shared with, again, your constituents, because I do think it can be easy just to assume that everyone's doing the same things you are, and, perhaps, they aren't. And so, doing that and then making sure there's a channel open for those people that do have concerns to talk to someone. And like you said, there might be some individual one-off scenarios that you have to kind of account for, that, if they do have a different situation, either personally or at home.
That's very true. I have one last question, and I'm going to ask this on the basis that I think, in looking at our list of attendees, that many of you are involved in organizations that have already obtained PPP loans. Hopefully I'm correct in that. And as you may know, there have been some changes passed this week by Congress. I don't think they've been signed yet by the president, but we expect that soon. I'm curious, I know Nicole has been doing an amazing job keeping up with and trying to understand the ramifications of these changes, because they're not all things that immediately may be positive to what our plans have been at Shalom Austin. And I'm wondering if anyone would like to comment on that, or think about what those changes might be, or summarize what they might be.
I can. This past week, the big changes were the covered period, which was previously just 8 weeks, has now been extended to, or will be extended to 24. So that's a big difference. You can still use the 8 weeks, or alternatively, you can use the 24. Or through, if it's not 24 weeks, it's through December 31st. The next big one was, whereas before you had to use 75% of your loan on payroll, that's going to be reduced down to 60. There's still uncertainty as to whether that's the cliff where, forgiveness, it's all or nothing. If it's not 60, that hasn't been clarified, but my guess is that, similar to this past, that it would be pro rata on that. So but overall down from 75 to 60%. The date for evaluating your head count for forgiveness, which was previously June 30th, has now also been extended to December 31st. Again, you're still, if you use the 8-week period, you can still use the June 30th, or you can use the longer and use that December 31st. Repayment terms are now at 5 years, but I believe that's only on new loans. So for any of us that have already gotten loans, I think we're going to still be at 2 years. Not 100% certain on that, so be sure to check the guidance, but I believe that's the way that one's going to work. And the other big one is that we are now eligible to defer our 2020 payroll tax while we have the loan, which as previously we were not able to. One of the big ones to me when I'm thinking about these loans, so now we have these 2 different periods, and I still think it's going to be important to evaluate what that would look like for you, whether it's using the 8-week covered period or the 24-week covered period. Again, knowing what the forgiveness requirements are and of the headcount requirements, the full-time equivalent as of that June 30th date or that 12/31 date. If you think you've got changes that are coming just because of the way that was you're running your scenarios, you're not sure what your headcount is going to look at a later date, but you know where you're at now. And if you think you're at forgiveness right now, then you may be better off at the 8 weeks as opposed to the 24 weeks. So the recommendation, I think, still is to really look at both periods and see which one is the most beneficial for your organization.
One of the questions we just got, do we believe that, is it with these changes, can we now apply for additional funds? Is it possible?
I don't think you can. I think it's one and done.
Yeah, I believe that to be true. I know you had to attest when you did the original loan application that you had not received those funds. I do not, unfortunately, think you can apply for additional funds either. Nicole, I agree with you. I do think that my understanding of that 2 to 5 year period is that's only on new loans as well, although there was something in that said you might be able to negotiate with your lender. The only thing I would add in terms of the terms, at least it's important to us as a restaurant, is the way that forgiveness calculation works, because typically it's based on, by December 31st, bringing back, to the same level employees that you had previously, and if you don't, then, you're thinking you're spending all the money, you're going to get it, forgiven. But if you've only hired 75% of your staff back, you're still going to have 25% you're going to have to pay loans money on as a term loan. There is an exception that got added in this time around that I'm curious to kind of everyone watch and see how this gets interpreted, because basically it says that to the extent your business cannot return to full level of revenue as a result of some government shutdown orders impacting that, then that's an exclusion that allows you to kind of have an exception on hiring back up. And so that's going to be an interesting one. And I think just putting my hat on as when I used to be treasurer of Temple Beth Shalom, what's going to happen with, high holidays and things like that, in the fall, if there's continues to be social distancing guidelines and all of that. So there might be some interesting interpretations of how to use that in your business that might help, make sure that you can get, as much of that money possible as free as well.
Great. Well, we're getting close to our time limit, and I want to thank Stacy, Nicole, and Scott very much for their time today and the great information that they provided. And if anyone has any more questions, please contact me through Daniel or Nicole at Shalom Austin, and we'll try to get answers for you. We want to continue to be a source of information for the community, and hope everyone found this to be helpful. Any final thoughts from anybody? Daniel, you still there?
No, I just thank you again to our panelists today. Really appreciate your time, as you said, Rick. And thank you to Rick for guiding us through the Q&A session.
No, I felt bad. I was the only person who didn't have any special letters after their name on the cover sheet of the presentation.
I don't have any letters after my name either. So wishing everyone a Shabbat Shalom.
Shabbat Shalom.